Two Bulls in a China Shop is brought to you in part by our sponsors and friends over at Manscaped, Trade Pro Academy, and Vanta Trading. Manscaped is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels, and with a new and improved 2.0 version of the Weed Whacker now available, it's the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that is the number 2. And when it comes to institutional quality trading education, look no further than tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for anyone trading futures, check out vantatrading.com. Founded by Mr. W. Banks and Baba Yaga, they provide a ton of educational content with the focus of teaching aspiring traders how to build a repeatable, profitable process. Our exclusive discount code for Vanta can also be found in our free Discord server. We'll have all of those links and more in the episode description. Thank you for listening, and I hope you enjoyed today's conversation.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Well, hello everybody, and welcome back to the China Shop. Joining me today is the jovial and jaunty Jerry Paul. He is the CFA, Senior VP of Fixed Income and Portfolio Manager of the Icon Flexible Bond Fund. How are you doing today, Jerry?
I'm doing great, Kyle. Thanks for having me on your podcast.
No problem. Did I get all the titles? I think there's a few that I missed in there, like
Oh,
Morningstar. I think gave you.
There's an alphabet after it, but don't worry about that, Kyle.
If you'd like to learn more about today's guest, make sure you check out his website at iconadvisors.com. And if you'd like to reach out to us with any suggestions, corrections, or questions for future guests, you can do that via email at 2bulls@financialineptitude.com, or you can just join that free Discord server where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. We'll have all those links in the episode description so you can peruse them at your convenience. But now let's just dive into today's discussion. So Jerry, tell me how you got started. Where did your journey begin?
Well, Kyle, it began a long time ago. I've been doing this now for 47 years, I guess. I started back with a mutual life insurance company in Iowa, where I was born and lived the first 35 years or so of my life.
So you're not too far from Peoria then, or
not too far from Peoria. I've been to Peoria a couple times in the course of the
I'm
life.
sorry.
But, well, not everything's perfect, but the people that live there, it's a nice community for them. So
I like it. It's nice and out in the middle of nowhere. We're actually down a little south of that now, but yeah, I like it. I like being away from the big cities.
Yeah, and I grew up in a town of only 600 people, so I'm familiar with real small town living.
Yeah,
and my first job that kept me in Iowa was with like I said, a mutual life insurance company, and it was really there, Kyle, that I was given the opportunity. I had a really great first boss, a guy named Mike Dobbs, who really gave me a lot of free rein as a young guy, and I really, working with him, developed this value-oriented bond style that I use, where I don't really spend a lot of time trying to forecast interest rates or what the Fed's going to do. There's lots of smart people doing that. I don't think I have any competitive advantage over them. But what I developed back in those days was this bond picking style. And again, I'll repeat myself, but I refer to it as value-oriented bond management. And much as you've probably had some stock pickers on your show in the past, I would refer to myself as a bond picker, and we're trying to identify things that have a unique value. Oftentimes our competition, which is way larger than my fund, they can't do some of the things I can do. They're smarter than I am, but but their size just prevents them from, being bothered by $1 million, $2 million, $3 million pieces of paper or sectors.
Wait,
And
2 to 3 million is too small?
if you're
Wow.
if you're the PIMCO bond trading desk and they just sent you an order to buy $1 billion of bonds today, yeah, you can't do
Oh,
it. Can't do it with ones, twos,
wow.
and threes.
Yeah.
But I can. I can at 190 plus million. I can make a difference in my fund with that.
Wow.
But I also like to dig up areas, Kyle, where they just can't play. The closed-end fund world has a lot of stuff that trades at discounts to its net asset value, and there's a group of activists that will attack those funds. I behave as a free rider on their backs, but right now one of my large
Ah.
yeah, I like to joke, Kyle, that I'm basically lazy, uh, but but my one of my largest positions right now is a closed-end bond fund trading at an 8 or 9% discount. The activists just took over the board. They control 37% of the shares. They're about to take over the investment management contract. And I'm pretty confident that they're in the next month or two, they're going to create an event where I likely get net asset value for most, if not all, of my shares.
Well, you're gonna have to explain how that works. Like, well, first of all, like, what is a bond? Let's start with that.
Well, a bond is essentially a contract between, the buyer and seller that, states a maturity, states an interest rate, has some covenants. Those are, legal um,
Hmm.
documents that govern our relationship. But it's I like to call it practical math, Kyle. It's really it's perplexing to a lot of people, but it's in essence it's just about present values and associated interest rates, and again it's just math in practice.
But I didn't realize, I guess, that the bond market had activists that get in there and do things like the activist short sellers that you see in the stock world all the time. That's kind of nuts to me.
What I'm talking about isn't so much in bonds per se; it's in the closed-end funds. And I might
Oh,
need
okay,
I
okay.
might I might need to define that. Some of your listeners may not be familiar with that, but closed-end funds that they can be bonds or equities, that sort of thing. I
Mm.
focus in the bonds, but they're basically unlike an open end fund, which is what my fund is. In my fund, all of your transactions, your buy, your sell is directly with the fund, and it's always conducted at net asset value. In the case of closed end bond funds, those have been sold by a brokerage firm in an IPO type of a structure. But historically, for a lot of complex reasons I won't get into, uh, they tend to trade at discounts to the net asset value.
Hmm.
And that's what creates an opportunity for an activist and someone like me to try and capitalize on realization of that value. Because these things otherwise can trade at a discount, sort of forever. But if you get an activist coming in, and again, to your point a moment ago, these are activists similar to the ones that you read about, in the Wall Street Journal, that a Carl Icahn type of
Yeah.
person. He's not one of them in this space, but they're in essence doing that sort of thing, and they're trying to get realize the net asset value. And the beauty of bond closed-end funds, while you're sitting there waiting, they're paying you a good interest rate or a distribution. It's not always interest, So the one that I was referring to a minute ago, well, I sit here and wait for the activist to actually, get me to net asset value. There, its distributions over 8% to me. So you get paid while you're waiting on them, and I've seen this activist in action for a bunch of years now, and you kind of get to know their mode of operation. And these guys have effectively, taken control of the fund, or in the final stages, and it's just a matter of time for them to create an event that they want to get their money back out too, and
Right.
go on to the next thing. And so it's just a matter of time and being patient. But I am almost at the maximum that the SEC will allow me to hold in this particular fund. uh, my compliance people are going to be watching me to make sure that I don't breach the level. The SEC dictates that I can only own so much of another 40 Act fund. 40 Act fund being a mutual fund.
Gotcha. Man, you said like 8 or 9% that these bonds are paying. Like that's one of the things that I always like never really looked into bonds because I guess maybe I just don't understand. But most of the ones that I ever looked at, like the rate of return, just never looked all that appealing. Like,
Well, again, it depends on what your objective is. Most of the people using my fund are going to use that as a source of income,
hmm
something that's got less volatility, standard deviation, whatever you want to call it, than maybe their equity portfolio has. They're likely retired or moving close to retirement and looking for that reduced volatility.
right, just something a little safer so they don't ruin or risk drawing down their nest egg.
Yeah, exactly. Who knows what stocks are going to do. It's been a good year for them so far, but if you're 70, you're starting to think that maybe I should take some of that off the table. And so,
Well, hopefully you're spending it at that point.
well, and you probably are, but and if you're doing that, you may want to some source of income, not be
hmm
counting on catching the market on an up day. And so that's where I come into play, is getting used in that sort of an environment. But there's all kinds of crazy fun stuff in the bond world that the average retail customer out there just never knows or sees this stuff. Last August there was a big jump in the yield on airline equipment trust paper. I can't tell you why that happened, but it did. And I stepped in there and I started buying yields of 8 to 10% on triple B rated bonds. That's low investment grade. And the yields oftentimes were higher than I would have gotten if I'd have bought a high yield or jump bond. And at the same time, I'm collateralized by the airplanes that you and I and your listeners are flying on. And if you've been on one of those planes lately, they're full.
Right.
So I have the collateral of the aircraft on top of uh, a business that's doing pretty good right now. So getting 8 to 10% yields on that was great. But that's not the kind of thing that your clients, if they're trying to buy bonds directly, they're just not going to see that sort of thing.
Yeah, I don't think I ever have.
No, they, those bonds again. They the bond world still largely is an over the counter market where
hmm
I'm talking to a bond salesman to buy the bonds that I'm going to buy. There's some electronic trading, but for retail investors, it gets to be a little bit sketchy out there because the institutional guys like myself, will basically try to mark up the bonds that I have by a few points and see if I can get some retail investor kind of suckered into paying me that for them. So,
Right. Right. That makes sense.
again, the bond world, you and I were talking earlier, it's not well understood by most people. And, that's part of the beauty of it for me is that, um, where I spend most of my time is even murkier. I'm not buying a treasury bond. I'm not buying a mortgage bond. I'm buying the, you know, triple B minus, airline equipment trust paper that has a
Right.
semi-annual sinking fund on it, and I'm buying it at 80 cents on the dollar. So, again, it's a world where I forget how many thousands of different securities there are, but it's thousands and thousands of different bonds out there. Your listeners probably mostly think of it as the treasury world, which of course is
Yeah.
it's huge, but there's so much more beyond that's my playground anyway.
You mentioned like so triple B. That's not necessarily great, but that's not terrible either, right?
Right, right, and you'd be
So what's the
surprised that
risk then? Like, what is the risk when you purchase that?
the lower you go in quality, the higher the risk is. The company gets in trouble and defaults on their bonds, and bonds can trade down, from par, which is 100 cents on the dollar, to maybe 40 or 50 cents, or sometimes even get wiped out.
Oh, I see. So you're purchasing these from, but you're basically the spread comes from the faith in whether or not that's actually going to get paid.
That's right, and
Okay.
the higher the risk, the higher the spread on it. A
Right.
typical, the junk bond indexes right now are something like 4 to 4.5% over treasuries. In my world, that gets called 400 to 450 basis points,
Yeah.
with one basis point being a hundredth of a percent.
Hmm.
And that's sort of tight right now, I think, Kyle, if you're expecting a recession down the road. And I think we're heading that way.
Yeah, I think you mentioned that on that TD Ameritrade network I listened to back. I think that was during the bank collapse
Yeah.
when SVB went down.
Yeah. And, so I'm kind of careful in that regard now. Anything that is, high yield, I'm trying to get collateral protection on it. I'm trying to be sure that, it's not real dicey. I don't buy triple C paper, which is, some of the riskiest. Most of mine would be double B,
Hmm.
a higher quality, high yield, if you will. And in the investment grade world, it's unusual for something to default if it's a triple B or a single A.
Yeah, especially when
It takes a while.
like when as I said, the bigger the industry too, then you also have things like government bailouts that probably can help you out too.
Yeah, you always want to be careful counting on the politicians.
Well, yes,
Yeah, uh,
but
but
it is just a nice little backstop, I suppose. That
but in my time at Icon, I haven't held a bond and had a default. So
well, that's
again,
good.
if you're paying attention, you usually kind of getting a heads up on things. So, and again,
Hmm.
that's an advantage of using a professional manager like myself or my competitors. Is that we spend full time doing that. Your listeners are hopefully out playing around the golf or boating with the grandkids,
Hmm.
or doing other fun things, not diving into the financial statements on a quarterly basis. That's
I think we probably do that too, but we enjoy that part of it.
But so again, that's where a fixed income professional can help people out.
So it sounds like so you're not necessarily counting on the yield of the coupon itself. You're more trading the difference in the value from what it's priced at now to versus what you think it should be priced at going forward.
Yeah, that's oftentimes what I'm doing, Kyle. You're spot on there.
Okay. But that makes I can understand that, and that makes a lot more sense and probably has a lot more room for or a lot more potential for reward.
Yeah, you're looking for a total return, not just the yield. Um,
Right.
that's how I've managed my whole career for total returns, and so yeah, and the more unusual things are, the less competition there is for them, and so
Hmm.
I tell my sales force, send more money. I always have more ideas than capital, and A day like today is a perfect example. Fortunately, I came into the day, frankly, by mostly accident, sitting on a
Hmm.
decent amount of cash, and I'm using this big treasury sell off over the past couple of days now to go ahead and buy some of the stuff that I wanted to buy or that I already owned at discounted prices from where they were the other day. I got a new position. I started in a closed end fund yesterday that I hadn't really been able to buy it cheap enough, and it cheapened up yesterday, and I got started on it, and I've got a little more bought today. But it's looking at an environment like today that's been kind of hostile and finding opportunities in it. And there's almost always opportunities.
Hmm. What's the name of the fund that you manage? In case people want to look that up, I think we should probably link that.
The Icon Flexible Bond Fund, there's an institutional share, and then I believe it's an A share. I'm kind of out of my water when I start talking about some of that stuff. I think about bonds. I think about bonds all day. I don't think about share classes.
Right. I think it looks like the tickers are IOBZX and IOCBZ. Is that correct?
That sounds right. Yeah,
Okay.
I'm always thinking in that institutional share term.
Right.
But yeah, we're having a good year against our competition again. If you look at my year to date, my 1 year, my 3 year, my 5 year, they're all in the top. Oh gosh, 5 or 10%. My 10 year, which is almost all mine now. A few more weeks. I think we're in the top 15 or 20% there. So
Oh, that's impressive.
yeah, pretty consistent, good long term record.
Well, that consistency kind of makes me think that this next question is going to be foregone conclusion there. But are there specific markets that you think you trade better in?
Well, I probably trade better in a bearish environment like we've been in.
Hmm.
And, I usually, historically, I've been more defensive usually than my competition. Morningstar cited me for that way
Hmm.
back when they named me fixed income manager of the year, that I protected people. And back then I was running strictly high yield, and I protected people in the late 90s downturn in that space. So yeah, I'd say more defensive, but that said, I've been doing pretty good in the past 12 months, where we've had some rallying going on. I think I'm up over 7% on a trailing 12-month basis.
Oh, wow. That's nothing to sneeze at.
For a bond fund, that's pretty good.
Yeah. Yeah, no kidding. You mentioned a few minutes ago that you were expecting a recession. Do you think about that? Like, does that play into like how you position yourself, or do you just kind of take opportunities as you see them?
Well, it plays in, Kyle, but I'd be kidding yourself and myself if I said that it's always a dominant thing. I mentioned
Hmm.
that earlier, that I think yield spreads are too narrow in the high yield world for that. So it tempers me on what I'm doing. It doesn't stop me from buying high yield, but it may have me characterizing it like I did earlier, where some of my airline equipment trust paper is double B, but again, I have collateral there and an underlying
Hmm.
business that's really doing well. An interesting holding that I have, if you've got any listeners in the Cincinnati area,
I think we have some Ohio listeners.
there's a very small issue of Cincinnati Bell, and because of its size, you get paid a couple percent extra over and above what you'd see in other stuff. And so I've been a
Oh,
buyer of that. I may be the largest holder of it because it's under $100 million of bonds, which falls into my sweet spot because again, the big guys can't compete with me there.
right.
But it's rated double B, Kyle. But I have a first lien on all of the telephone equipment that helps service the Cincinnati region. Now, if they were to file Chapter 11, the bankruptcy court isn't going to let me take that equipment away. They're going to tell Cincinnati Bell to keep paying my bonds while they work it out, and it's probably going to get bought by AT&T or somebody like that.
Right.
But it's rated double B because it's held by it's owned by a high yield holding company, and so the rating agencies will only rate it so high. I was joking when they were talking about the debt ceiling, and people were fretting over where was the government going to pay their bills, and I said, well, I own this telephone company bond. It's a junk bond, but it's probably safer right now than the U.S. government is. And but I have a position in my fund of 2 to 3% in that thing, and I think it's as good as gold. So it's that kind of tilting, if you will, that I will do when I think that things could get uncomfortable in that space.
So with this telecoms company that you mentioned, like, did you have to negotiate that for the bond purchase in order to have the cell tower assets backing it?
Kyle, that deal was done a long time ago. And I came in the middle of the party, if you will. And so, I knew when I was buying it that I had that lien. It was sold
Mhm.
originally as a first lien bond. And that was all done when it was still an investment grade company. And that was kind of a standard issue, if you will. But you don't see that much anymore. And then in the course of time, they got sold to this, holding company structure as private equity. You might get a kick out of this. I call it the Willie Sutton School of Investing. You go where the money is, Kyle. The money's at the telephone operating company, and that's what this bond is. It's skipping down through the holding company level to where the real money is. And
You actually might be better off if AT&T did take it over, because
oh, I'd
then
love
that
it.
should only, yeah, right.
I'd love it, Kyle. I
So
bought this
it's
stuff.
almost like a can't lose.
I've bought
Yeah.
most of it to yield 9%. You can't get 9% on AT&T money. They most likely would call it as quickly as they could because they don't want a first mortgage bond outstanding either.
Right.
No, I'd be delighted if that happened. Call
Right.
call AT&T up for me and suggest it to them.
Yeah, they don't listen to me. You think
Oh,
you think you're small potatoes, and I'm even
well,
smaller.
I give you that as an example of how you can
How you utilize that?
build a portfolio even with credit, even when you have concerns that credit spreads might widen out, and
Hmm.
or default rates. We're already seeing default rates tick up. This kind of paper, I won't tell you it's 100% safe from that, but it's probably 99 point something safe just because of the first lien on the equipment. If they did get into
Right.
trouble, historically, Chapter 11 is intended to bring you out as a restructured company that can operate successfully.
Right.
And the bankruptcy courts have historically allowed companies to continue to make payments during bankruptcy on essential equipment or property. And so, if Cincy Bell was to have troubles, they're going to let them keep paying on this first mortgage bond, just as they would let the airline keep paying on the equipment trust paper. So,
Right. Yeah, they got to have their airplanes in order to keep flying.
exactly. So that's a big factor in my thinking, especially in the last couple of years in buying high yield related paper. And sometimes there's a special situation in the space that justifies, taking the risk to, you know, I could bore you endlessly with stories about some of that stuff, but
Well, I'm about to ask you about 2008, 2009, what you saw there, like the lead up to it and coming out of it, what you were doing, how you were positioning.
actually, back then, Kyle, I was running a merger arbitrage hedge fund. and
Oh,
which is merger arbitrage is a lot like buying zero coupon high yield bonds. Um, but I actually closed it down and returned my money to my investors just about the time Bear Stearns went belly up.
oh wow, you
So
timed that perfect. Was that on purpose, or
might
did
be.
you
Oh
see the
yeah,
writing on the wall?
yeah. No, I was looking at things and I said that the merger arbitrage world is changing, and I don't think I can invest safely in the fashion that I told you I could.
Hmm.
And so yeah, we returned our investors, our partners, money in I think it was March of '09. So that's what I
Wow,
was.
good.
That's what I was doing then. It was a period of time where I wasn't directly investing in fixed income all the time.
It sounds like you got out at just the right time.
Uh, sometimes you're lucky, but I like to think that it was paying attention to what was going on, and
Right.
we were going into a bad meltdown.
Are you seeing are you seeing similarities between that time period and kind of what happened uh, recently with the three bank failures that we had back in April?
Well, it had the potential there. That's what got everybody spooked
Hmm.
initially. Um, but it was a different kind of problem. I think a lot of it unanticipated. I don't think we understood how swiftly um, deposits could move. That's changed. That's changed a little bit. It was also the character, at least for SVB. Uh, the
Well,
character.
SVB was mostly venture capitalists, right? That
Right.
were
That's
invested
correct.
there.
That's
I got to think
correct.
they're probably a lot more flighty than your typical bank depositor.
Well, and they were huge deposits. It wasn't
Yeah,
mom and pop deposits. It was, maybe 50, $100 million and more in some
right.
cases. And so, if you or I, pull our $25,000 deposit, that's certainly one thing. But if somebody else pulls 250 million, um, you know, but
Yep.
back to your query, it had the potential to escalate. It didn't.
Hmm.
Um, that's and that calming down. You know, that was what became especially different from the '08, '09 meltdown. That was also a time where you had a lot of securities that everybody thought was AAA, um, but they were built off of those questionable mortgages,
Right. Right.
and so that made the problem different. That was clearly going to impact capital. Um, it did impact capital. Um, with the this year's banking crisis, if it was, um, it was really more about the liability management and the access to the money.
Hmm.
A little bit more like the old Christmas movie, "It's a Wonderful Life," where the depositors wanted their money, and in today's age, you can, with punch a couple of things on your keyboard, and
Hmm.
the money's moved. Um, a little different than having to go in and show them your passbook and ask for your
Right.
money.
Right. Though it still takes 3 to 4 days for a large sum to clear. Which,
So yeah, it had the potential. Thankfully, it didn't escalate. Um, the regulators got onto it. They were way slow. I mean, there
hmm.
was obviously a regulatory problem that got us to that point too. But for me, again, it created an opportunity in this. I bought
Right.
a bunch of this, what's known as fixed to float paper. Bank America is one of my larger holdings right now. When I was buying it, had fallen 4 or 5 points, bond points. So from say par to 95 cents
Hmm.
on the dollar. And it was a 520 fixed coupon. um, that was going to reset against LIBOR, 300 and something over LIBOR. And LIBOR, of course, was into the fives. And so
What is
on June,
LIBOR?
LIBOR is the London Interbank overnight rate, which is now
Okay.
going away. It's going away because of the scandal from years ago. But anyway, on June 1st, my Bank America 520s became Bank America 863s. So I'm getting
Oh.
8.63% on triple B Bank America paper. And with the environment that we've been in, I think, we're starting to emerge from it. They're not, the market's not real receptive to refinancing that stuff right now. And so
Mm-hmm.
I think I'm going to get my 863, and when it if it resets on September 1st, because it resets quarterly, I think my rate will begin to approach 9 for Bank
Wow.
America paper. Now, I
Wow.
also had the same opportunity in Prudential paper. So, once again, an advantage of professional fixed income management that a typical retail investor wouldn't have had access to that stuff. So
Did you gobble up any Credit Suisse, or did you stay away from
no,
that one?
no, I didn't feel like I knew enough about that. And as I noted in an earlier remark, I get nervous when it involves government and the complexities that
Yeah,
come into place on that stuff. I felt a lot safer, buying Bank America paper. And
I would have too.
again, it's important to manage your risk taking.
Yeah.
I probably haven't made enough of a point of that, but that's something as a professional fixed income money manager. That's part of my job too for the
Hmm.
financial advisors or the retail customers who are using my fund is to try and manage the risks that are appropriate to take and the
Well,
magnitude of it.
is there opportunities for someone to do what you do without the bankroll that you have, or is the best chance that you have for trying to take advantage of some of this stuff is to invest in your fund?
Yeah, the institutional market in the like the airline equipment trust paper or this fixed to float stuff, that's not really going to work for a retail investor. So
Is it your dog in the background?
that's my wife's dog. I took her to the airport today, and so I'm now babysitting her dog and my son's dog. And I'm okay with dogs, Kyle, but I
Hmm.
wouldn't have a dog except I married this beautiful woman 49 years ago, and she's a dog lover. So by
How
default,
long is
I'm a
she?
dog lover.
How long is she gone for?
She's down in Texas with a girlfriend for 10 days. So
I
I'll be,
just sent. I got to pick my wife up from the airport this evening. She's been
uh,
gone since Saturday, and I've been pulling my hair out with boredom.
oh well, I'll be eating out a lot, and
Right.
uh,
That's the one good thing is I got to eat some
I'm
good
gonna
food.
be I'm gonna be forced to mow my own yard here sometime too.
Oh God, don't
Yeah,
get me started with that.
yeah. But yeah, the dog sees the shadow and it barks. If I come into the house, it barks at me.
Oh, so
But
it's definitely her dog.
they're good animals.
My grandparents had a dog that would, whenever you'd stay there, you'd wake up and they'd just be staring at you, waiting for you to leave.
These stare at me, hoping I'm going to drop something on the floor for them.
Exactly, exactly.
But yeah, I see absolutely nothing going on, that would cause the dog to bark, but it barked. It saw some shadow, I guess.
What are you gonna do? Well, there's one of the questions on here that you suggested during the planning of this. Best advice for investors after your 40 years of experience managing a portfolio. What's your best advice?
Oh, there's a couple things, I guess. Do the best you can to understand the risks you're taking. and you need to be patient. Those would be the two things that I would note. Um,
Let me
understanding.
ask, was there a specific incident that made these stick out to you?
Oh, it's a long time of investing in the kind of stuff that I do. You need to be patient. Um, bonds don't move like a Google or a Meta or a
Or ES?
Nvidia. This is slow motion stuff. I used to tell people what I do is about pennies,
Hmm.
not dollars, and so you need to be patient. And I've experienced lots of different levels of risk over this 47 years. I've made some mistakes, and I'll probably make some more. Um, Misunderstanding a risk that I thought I understood. And that begs for diversification, because you're not always going to be right, even if you're a professional investor. So those are the things that I think about that when I'm out talking to financial advisors, um, and they're trying to do those kinds of things in the best interests of their clients. We talk about that kind of stuff a fair amount of the time.
As a CFA, like what are some of the qualities you think someone should look for when they're trying to select somebody to help them manage their money or to give them advice?
Well, this might offend some of your listeners, but I'm really big on fee based advisors as opposed to commission based. Um,
Hmm.
I think
I would agree
if
with you on that.
if you're looking for a financial advisor, they really need to be prepared to customize to your needs. They need to be somebody that you're going to be comfortable with. They don't have to be the great investor. They need to have the tools and the skills to find somebody like me,
Hmm.
or others. There's plenty of others out there to make those investment decisions. I really think a financial advisor for people. Some of the best value they bring to the table, Kyle, is helping individual investors stick with it and
Right.
not panic in the tough times. There's always tough times, uh, but that's the worst time to lose your cool and to forget what your real objectives were. And so those are the things that I would look for in a financial advisor, somebody that takes the time to really understand your situation. And they're just not everybody's unique, but there's plenty of unique situations out there. And
One of the piggyback on that, one of the CFAs that I've talked to, maybe it's like a year ago or so, he said, take note of the secretary or the receptionist or whoever checks you in and see if she's happy.
mhm.
You can learn a lot by how the people treat, the people that are the support staff. If she's not happy, then you probably don't want to be there.
Well, and oftentimes those are some of the most valuable people that you're
Right?
going to find, because a lot of the times uh, your advisor isn't going to be readily available.
Right. That's
And
the person who's interacting on your behalf. You want them to be at their best.
oftentimes, and no, I think that's a worthwhile suggestion that you received from that person. So, yeah, again, interview several people and make sure you've
Hmm.
got a good chemistry with each other. Because hopefully you're in it for the long haul with your advisor.
I think that's very well said. Jerry, where can people find more information about you, about your funds?
Well, I'm on LinkedIn. If you reach out to me and you don't look like you're in Nigeria, I'll probably add you to to my contacts of, I don't know, I think I'm around 3,000. I don't do much on LinkedIn just because of regulatory issues that I get myself in trouble on.
Yeah.
Our website has papers that I've written on the market. I don't write often. I only write when I think I have something different and unique to say. So you can find stuff like that on our website. There's a bio on me, on there if you care about that kind of thing. Those are different ways. You can Google me and you'll find some quotes and other things I've said. That's all historical kind of stuff.
I'll make sure we put all those links in the episode description so everybody can find that. Jerry, I just want to say thank you for taking the time here. Really appreciate learning a little bit more about how the bond market actually works, and definitely a lot different than what I thought.
Well, again, I do it a lot different than others too, and so there's
Well, it
there's
makes a lot more sense now.
well, there's there's a lot of ways to go about it, but mine's been pretty effective now for the 47 or so years I've been practicing it. But I'd like to thank you, Kyle, for taking your time
Oh,
to hear me out and have me on your podcast.
well, I appreciate that. I don't think you're the first person who said thank you to me. Well, unfortunately, we have come to the end of our time with Jerry, but you don't have to be sad. Check out iconadvisors.com if you want to know more. Make sure we have all those links in the episode description. And we'll be back soon with another exciting episode. But in the meantime, hammer that 5-star rating like Big Daddy Powell fighting inflation, and take care.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.